Kia ora everyone, welcome back to our next edition of Econ Talks. Gareth, we've seen the latest labour market data for the second quarter of the year, the 3 months to June, showing a further increase in the unemployment rate, now up to 5.2%. That was in line with our short-term expectations, but a little bit better and being a little bit lower than the market pick at 5.3%. And as the Finance Minister has been at pains to point out, lower than Treasury's budget expectation of 5.4%. Now, looking through the numbers, there's quite a lot there. I mean, you look at the likes of the underutilization rate as well, which has increased. You're seeing a lot more people that are not only out of work, but of course, people who might be employed, but they're not working nearly as many hours as they want to. A number of people who are underemployed, and also a number of people who are not formally considered unemployed, and that they are, they're out of the workforce, they're not in the labour force, they're sort of disenfranchised, they might be thinking about study and similar. All of that sort of coming through. What did you make of the latest figures? It's pretty clear that labour market is still getting a bit worse, but some sort of, I guess, different trends emerging below the headlines.
Yeah, I mean, we had been expecting the unemployment rate to peak in the June quarter for probably the last 12 to 18 months is when we've sort of been looking for that. But still not really any signs that it's there yet. As you mentioned, still people falling out of the labour market in terms of not participating, and that participation rate, as you would expect during a downturn, drifting lower. But it's also showing through, of course, in terms of actual job numbers continuing just to ease slightly as well. So the news, when you look underneath that sort of headline number, yes, unemployment a bit better than the market or Treasury might have expected, but there's still not a lot of good news in those labour market numbers overall. It's also translating through, of course, into slower wage growth, which from a business perspective is good after some of the big pressures that we saw through the pandemic when the borders were shut and labour supply was really, really constrained. And also good, I guess, from the Reserve Bank's point of view, if you are seeing those labour cost pressures continuing to ease, it does mean that from a broader inflationary perspective, that there's sort of less pressure coming through the system overall as well. But yeah, signs through there that we're still not quite at that turning point for the labour market. And for me, that is still a key in terms of the broader economy starting to turn around from here. At the moment, given that things are still deteriorating, it's not too surprising that households are still cautious with their spending. They're facing some cost of living pressures coming through in terms of food prices, local government rates, electricity prices as well. And so you overlay that with the fact that job security and income security still on the sort of poor side of things. And people, if they are getting a bit more money in their pockets as mortgage rates come down, they're certainly not rushing out the door to spend it.
That's true, and especially, I guess, one of the big or more interesting shifts is the sense that although the unemployment rate increased, it could have, and it certainly could have in previous quarters as well, been even worse in a sense. You have been seeing, of course, the people who are migrating overseas, they're not counted in our labour market statistics at all, so that's sort of naturally limiting some of the changes. But you highlighted as well the participation rate coming lower this quarter, a sort of a further fall, and that seems to be particularly as young people are again not looking for work. They're going much more sort of directly into study and training. You've seen a big boost in some of those numbers, but there is also again a little bit of a trend of some groups who are just becoming a little bit basically disenfranchised. They're not able to find work. They're not looking anymore. They're going back to other things that, that they're looking after kids at home or similar, whereas they might have previously been trying to look for a role, but there's just sort of nothing out there. I guess the outlook as well, what sort of concerns us, right? You look at the likes of the employment figures. Again, it's not only that there are more people becoming unemployed, but again, just total numbers in employment dropping. Job ads suggesting that really things have been moving sideways for the last 12 months. Now, yes, the labour market's one of the last parts of the economy often to turn around, but so far we're just not seeing any real shift from businesses about thinking to hire more or anything. Surely, until that happens, people are going to be still in a pretty sort of constrained state.
Yeah, it is one of the strange dichotomies when you look at the numbers around the broader labour market situation, is you've got, as you say, job ad numbers still low, going sideways and sitting about 30% below their 2019 levels, which we kind of think of as being normal. So there's not a lot of advertising happening yet. When you look at business surveys, business confidence is really high, employment intentions, investment intentions are at really strong levels as well. But that is not at this stage translating through into more hiring occurring. If anything, those job numbers are still, as we said, trending down. So Yeah, it is a constraint, I think, on the economy going forward. And I mean, it's almost a little bit of a catch-22 where businesses are going, well, we're not going to go out and commit at the moment, partly because of a whole lot of international uncertainty, I think, maybe hanging over things. But also, they're looking at demand conditions and going, oh, we thought things were going to turn around late 2024, early 2025. There were a few little green shoots, dare I say it, coming through in some of the indicators as well. And now that all seems to have dissipated. So, you know what? We're not going to go out and hire. And if they're not hiring, people aren't spending. And if people aren't spending, they're not hiring. So, which one changes first? Now, we're kind of hopeful that the sort of external stimulus with strong export prices coming through into farmers' spending over the next 6 to 12 months, that is something of a catalyst for more economic activity and maybe starts to sort of break that sort of deadlock or Mexican standoff that we're in at the moment. We are, as I said, looking for the labour market to start to improve, but it is a bit of a waiting game at the moment, given those indicators we're getting through, and the fact that sort of lead indicator around job ads, in particular for me, has not shown any signs of picking up yet.
And that's the thing, we'll continue to watch all of those figures, but it is job ads that really, I think, will give us the first primer on when things are starting to turn around. We'll assess all of the data that keeps coming in, the number of job numbers themselves, the likes of wage rates, spending, how businesses are intending to move in the future, and most critically, how those job ad numbers evolve on one of our future editions of Econ Talks.